Are you blindsiding your spouse with your retirement goals and expectations? Whether you're just deciding to spend your lives together, or maybe you've been together for a number of years, you may think at this point that you've worked out all the things and all of the money issues. But the reality is, you may take certain things for granted, and retirement's a whole new phase of life. Are you ready to face this together? Don't miss the opportunity to have some really important conversations now before emotions are too high and it might cause some issues. I'm Amber Knips, Wealth Advisor at Sweet Financial Partners, located in Fairmont and Jackson, Minnesota. And I specialize in working with high net worth individuals who are at or nearing retirement. We believe everyone has the right to realize that their dreams are possible, and we use that as our focus when we're working with clients, helping them plan for their future. I have a couple I recently started working with, and he worked outside of the home and she stayed home and took care of the kids. They had one checking account, income went in, expenses went out, and it worked great for almost 30 years. Well, now that they're in retirement, it's a struggle. She wants to travel and see the world, and he doesn't. He thinks that they should be more cautious, save more money, and it's caused a lot of friction and even conversations of mine versus yours. So too many times have we seen couples who have a great system for expenses and savings, and in the working years, things work great, and then in retirement, things start to crumble. And it might not be the case anymore. So today, I want to go through 8 really important questions to be having before you retire. So think of going out for a nice dinner and having some of these conversations. So the first being, should we retire at the same time? There are several things to unpack here. The most obvious being, well, what's your overall finances, right? Do you have an income stream that can comfortably take care of expenses? Looking at, well, where do you take income from, and working with an advisor to be the most tax efficient and figure out where to take those withdrawals from is really important. Oftentimes, it's not as simple as just taking from the biggest account. So we believe that a withdrawal strategy can make or break your retirement. The other big thing to consider is your emotional and physical readiness. This is more than just, well, I'm age 65, I'm Medicare eligible, time to retire. It's having a plan for how are you going to spend your time and all of the extra time together. At least once a year, I have someone jokingly say, I'm not retiring if he's retiring. And all jokes aside, retirement may be a great time for you to spend time together, but it might look different for the both of you. For one, maybe it's an escape from the daily grind, the stress of work, all of the meetings. And for another, it might be a loss of identity. So there's no rule saying you both have to retire at the same time. You both have to love all the same things. It all depends on you individually, but ultimately working together to figure out what's the best plan for you. So the second one would be, will we find a new place to live? And this one can be a big conversation of making sure you're both on the same page and considering all of the things. So something we see often is considering downsizing. So maybe taking that personal residence in maybe getting something smaller or renting a condo. Maybe you want to move closer to family and spending more time with grandkids. Whatever your reasons are, there are a lot of things to consider. And a great first place to start is that pros and cons list so that you're considering all of the things. And this is a great thing to bring to your advisor too, because it's likely they've had this conversation many, many times before. So they can help make sure you're thinking of all of the things and considering everything that should be considered. And really looking at what would be the cost of staying in your current place and what's the maintenance, the utilities, all of those things. Do you have any renovations that you need to do so it's more accessible? Some of those things are important too. And then looking at relocating, is there going to be some HOA fees, maybe extra expenses that you wouldn't normally have, and then renovations still could come into play. So making sure you're taking all of the considerations in from a financial standpoint and looking at the best way to make that decision. And oftentimes we have people say while they're working, oh, I can't wait till winter down south, especially if you live in Minnesota. We see a lot of negative 10-degree days. It might be times where we spend a lot of time thinking of warmer weather. I had a conversation with someone and we were working through their retirement plan through the dream architect process. And they're like, oh, can't wait to buy a Florida condo. It's going to be wonderful. So I love to explore those things and kind of talk a little bit more about it. So I was like, well, tell me about it. Why'd you pick that area? And they're like, well, I don't know. We've never been there before. I'm like, oh, well, tell me more about, is someone there that you know that you like? And they're like, no. So my first recommendation was maybe you should take a trip there and check it out and see what it looks like. And they do that and they come back and they're like, Amber, it was awful. It was so busy. It took forever to get to the ocean. We didn't like it at all. But in our minds, sometimes we build up expectations. And then when we get there, we're like, this isn't at all what I was thinking. So had they just committed to buying something sight unseen, they could end up with something that really wasn't the right fit for them. So talking through that and maybe postponing some of those decisions can end up being a really good thing. So doing different things different ways isn't necessarily a bad idea, but making sure you're having that conversation. And the third conversation, which can be a big one too, is how are you going to spend your time? What retirement looks like is so different for everyone. There's not a one size fits all. And maybe you envision lots of travel and taking, family trips or, seeing the world. And maybe the other person, your spouse, they just want to pursue a passion that they couldn't do before. So to avoid conflicts down the road, having that conversation to understand each other's desires. How do you want to spend that time? Doesn't mean you all of a sudden have to love traveling, even if you actually hate it. We don't want to be miserable doing some of those things, but maybe it's compromising, finding a trip that you'd love to take together every year. And then your spouse says, well, now I have a travel buddy who's a friend or family member, and we can have, kind of the best of both worlds. And if you're thinking about starting a small business like woodworking or maybe baking, something that you never had the time to before, sitting down and having the conversation with each other of what's that time commitment? What does that look like? If things really take off, does it mean that you're going to have to say no to some of the things that were important to you before? Or what does that look like? How will you navigate that so it doesn't cause a source of frustration if things really do take off? And number 4, how will we handle household finances and personal money? If you've been together for a while, you might have a great system. Maybe it's a shared bank account. That's pretty common. Expenses come in and out, or maybe you keep things separate because you don't want to justify any purchases to someone. Well, either way, there's no right and wrong. It's just finding the system that works for you. But depending on how you've saved for retirement, whether it's more in pre-tax or if you have pre-tax and Roth, it could be important to really have that conversation because it might not be an equal split between you. And that's okay, but focusing on what could potentially cause that source of frustration. Are you going to take withdrawals to be the most tax efficient? Or is it saying, well, you pay for this and you pay for that? It's oftentimes a challenge. So you're going from saving and saving, and that's been burned into your brain for so long. It's almost now you have to rewire your brain to think, okay, it's okay to spend a healthy amount from your portfolio, but where does that come from? So whose account does it come from? Does it bother you if all of the expenses come from your account for a while and then eventually from your spouse's? Or does it need to be equal? So once retired, I'm still a big fan of keeping an emergency fund for some of those quick things that pop up. And then within your investment account, keeping a couple years worth of income in something that's a little bit less risk, maybe not quite as much volatility, just so if things pop up and when things pop up, you don't have to say no to something that's important to you because of something that's out of your control, like the markets, like inflation, elections, things like that. We always want to not have to change our lifestyle because of something bigger. And number 5, should we get out of debt completely? And being debt-free is oftentimes something that a lot of people feel like they need to be when they're going into retirement, but it's not always the best decision. So I want to clarify that credit card debt is always a good thing to pay off. And then making a plan to say, I only charge every month what I can afford to pay down and not carry a balance. But when it's things like a mortgage or maybe even a vehicle payment, depending on the interest rate, you should really take that into consideration first. Because oftentimes, especially if it's an older mortgage, those rates are really low and the interest is tax deductible. So it could work in your favor keeping that payment and instead maybe changing your payment coming from your bank account, your regular income and expenses. It could come from your investment account instead. So if you're focusing too much on paying that debt down and really pushing that through, maybe you're not saving an adequate amount every month, and that's maybe not in your best interest. So having that mortgage expense isn't necessarily a bad thing if you're still having those investment accounts that are generating interest. So really diving into that with your advisor and saying, what's the numbers? What does that look like? What is in my best interest? I've had clients who saved all of their years only in pre-tax funds, and then they get into retirement and they're like, well, I want to pay my mortgage off. And I'm like, gosh, I don't think that's a good idea. We run through the numbers and they're like, wow, that's a lot of tax. I'm like, I know. So really considering the best way to do that, it might not necessarily be paying it off early, but just maybe changing where those payments come from. So like I always tell clients, if it's keeping you up at night and it really bothers you, maybe paying off the mortgage is the best decision, but looking at the numbers first so you're making an informed decision. Number 6, when should we take Social Security? This is a question I get a lot and a conversation I have a lot and something you might be wondering too. And it's a big decision, takes a lot of considerations as you can only change your mind once and you're very limited on being able to change that. So although it's an individual decision about when you draw, it's your benefit. The benefit amount you take and when you take it could really impact your spouse, especially if they're younger. So spouses, as well as if you're married for over 10 years and maybe you're divorced or you lost a spouse, you have some other options that are worth considering versus, well, I'm 62, time to take my Social Security benefits. So waiting to collect could make a big difference for you or even your spouse at some point. As part of our Dream Architect process, we take careful consideration in saying, what makes the most sense for you? It's not a black and white decision that makes sense for everyone. It depends on how you've saved and the types of savings that you have. So the recommendations really differ from family to family. Number 7, should we revise our investment portfolio? And this is an important one because for 30 years, what's worked is being really growth oriented and having those intentions to grow your portfolio. Well, that might not be, your goals anymore. So generally speaking, it's often smart to reduce investment risk in retirement, but that doesn't mean selling all your growth portfolio investments and going to, say, bonds. But what it does mean is looking at different types of investments to utilize to really reduce the risk in your portfolio. So fully diversifying and taking advantage of other types of things. So going through our Dream Architect process again can really help you get an idea. How much growth do I need in my portfolio? How much growth do you need in your portfolio to make sure that you can reach your goals? And maybe you find out you're taking too much risk and you can dial that down. Or maybe you'll find out you need to take a little bit more risk to make sure that you're not saying no to something that's important to you. You and your partner may have different styles of investing, and that's great, and that's totally fine, but ultimately still working together as a team to make sure that your differences are coordinated so that you're both comfortable with the amount of risk that you're taking. And number 8, will I still be able to financially help my kids and grandkids? And while all of the questions that we've gone through are emotional and financial, this is probably one of the hardest ones. And as a mom, I completely get it. We always want to help our kids, and it's great if we can. But when it comes to retirement, it's still really important to put your needs first. So think of it just like when you're on an airplane and they always recommend you put your oxygen mask on first. It's really hard if you don't have the stability and the security to be providing for someone else. So if you've typically helped a lot in the past, it might be worth having that conversation with that family member to say, Here's what you can expect from me going forward. And don't feel guilty. Your family's ultimately going to be better off if they don't have to worry about your financial security down the road because you've been spending too much in the meantime. So if you're working through planning with your advisor, talking to them about that expense too, if that's important to you and a priority, make sure that they know that. And depending on how, what your goals are financially to help them, there might be some tax advantage ways to do it that you didn't originally think of. So it's a great conversation to be having with your advisor too. And the biggest takeaway is start having some of these conversations now because they're very, very important in your long-term success, just as much as the financial piece. So helping navigate through, that's something we can do with our Dream Architect process. It helps you make sure you're covering all of the bases and thinking of all of the things because you don't know what you don't know. So reaching out, the link below will help you schedule a time for a no obligation consultation where we can talk a little bit more. And I would love to give you a copy of our book, Dream Architecture, for no cost to help you build a retirement beyond what's possible.